Good evening to everyone. And today's expert is Aishwarya. So, she is a CA and assistant manager at ClearTax. And she does have hands on experience on Indian and Australian taxation. So she's also worked extensively on income tax, GSTs, statutory and internal audits, and tax plannings for diverse clients. At ClearTax, she leads the income tax return filing process and helps client navigate financial statements with compliance and clarity. So, Aishwarya, can you take over?
Yes, sure.
Great.
Yeah. Yeah, thank you. Thank you for the warm introduction. So, good evening, everyone. So this is CA Aishwarya from ClearTax. So, first of all, welcome to the session. So, today's session will be all about the financial wellness as well as the tax savings. So, before we begin, sorry for the voice because I am suffering with cold, fever, and all. So, sorry for the voice. And yeah, let me quickly share my screen. Just give me a minute. Okay, so I hope my screen is visible.
Yes.
Okay, fine. Thank you. Right. So today's session will be all about the financial wellness as well as the tax savings. So here in this present session, we will be talking about what are the tax exemptions that you can claim from your salary income, right? So I understand that most of you are salaried individuals. So in that case, let us understand what are the tax exemptions that you can claim from salary. We will also talk about the housing loan. So if you have housing loan, so if you have taken housing loan for the purchase of the property, then what are the tax benefits that you can claim out of that? We will also talk about what are the investment options that are there under section 80C. So there are various investment options which you can explore under 80C. So that is something we will discuss. Then we will also talk about the pension products. So we have two sections dedicated for the pension under the Income Tax Act. So we will discuss about that as well. Then we will talk about what are the other deductions which are available, which are beyond ATC, like the medical insurance, premium, donations, etc. So that is something we will discuss. Then we will talk about what are the important points or what are the key highlights that you should keep in mind for assessment year 25-26 filing. Now the filing has already begun, so few of you might have already filed your income tax return and few of you might have not done it yet. So we will be talking about what are the important points or what are the changes that are applicable, and also we will talk about what is the due date for the filing. Then we will also do a comparison between new and old tax regime with regards to the tax slab and the rates that are there under both old and new tax regime. After that, we will also take up your Q&A. So you can post your questions in the chat box. So you have the chat box. So if you have any queries when I'm explaining anything, please put it in the chat box. You might not have the access to, talk by unmuting your mic. So that access might not be there with you. So what you can do is if you have any questions, please put it in the chat. We will have 10 to 15 minutes of dedicated Q&A towards the end. Now, talking about what are the tax exemptions that you can claim from your salary, right? So, whoever is raising their hand, so you might not be able to talk in the session. So, what you can do is if you have any queries, please put it in the chat. Now, what are the tax exemptions that you can claim from your salary? First thing is the HRA, now the house rent allowance. So, if you're staying in rented premises, in that case, you can claim this HRA allowance. In order to claim this HRA allowance, there are three criteria that we consider, and least of these three criteria will be allowed as your HRA exemption. So here the first criteria is 40 or 50% of your basic salary. Now, 50% is for those individuals who are staying in metro cities like Chennai, Mumbai, Delhi or Kolkata. But if you are staying in any other cities, in that case, 40% of your basic will be the first criteria. For second criteria, we will take actual HRA that you have received from your employer. So that will be the second criteria. And for the third criteria, we will consider the excess of 10% of your basic salary over the actual rent that you have paid. In simple words, actual rent paid minus 10% of your basic salary. So once you do this calculation, whichever criteria gives you the least amount, so that will be the HRA exemption amount. But this will be allowed only if you are opting for old tax regime. And from assessment year 25-26 onwards, right? So before, what we used to do is we used to calculate the HRA exemption and only we used to put one amount there. But from assessment year 25-26 onwards, the basic salary details, the amount of basic salary, the amount of HRA that you received, the amount of rent that you have paid, and the city that you stay. So all these things needs to be entered, and the HRA exemption will be auto calculated by the income tax portal. Talking about LTA now, which is leave travel allowance, again this can be claimed only if you are opting for old tax regime. Now, in order to claim this LTA allowance, so here you need to take leave and you need to travel. So if you do that, you can get the LTA exemption. So this LTA exemption is allowed twice in a block of 4 calendar years. That means for the purpose of LTA, we follow block system, and each block comes with 4 calendar years. And the current block that is relevant for us is 2022 till 2025. So in this period of 4 years, you can claim 2 LTA exemption. But by any chance, if you couldn't utilize these 2 LTAs, you can carry forward the unutilized LTA to the first year of the subsequent block. So for us, the subsequent block is 2026. So if there is any unutilized LTA, you can carry forward it and then utilize it. But here you need to take only domestic travel. You need to travel within the territory of India to claim LTA exemption. So here, while traveling, you can accompany with you your spouse, your child, your dependent parent or siblings as well. And here for LTA exemption, only the travel tickets, the cost that you incur for travel tickets are covered here. If you are incurring any boarding, lodging, food expenses, so those are not covered. Now talking about the housing loan here. So when we talk about the housing loan, right? So there might be a possibility that few of you might have taken housing loan for the purpose of purchase of your house property. Now when we talk about this repayment, so there are two components involved. First is the principal repayment, second is the interest repayment. So in this slide, we will be talking about the interest component. Further, we will also talk about the principal component. Now, when we talk about the interest component, so there are two sections under which you can claim the deduction. First is under section 24B and second is under section 80EE. Now, under 24B, you can claim deduction up to 2 lakh rupees if that house property is a self-occupied house property. But this deduction you can claim only from the year of the possession. That means if the property is under construction or if you still don't have the possession, in that case, you cannot claim this deduction. And also, if there is any interest that you repaid before you got the possession, so that will be termed as your pre-construction interest. And this pre-construction interest is allowed its deduction in 5 equal installments starting from the year of the possession. That means in simple words, from the year of the possession, you can claim two types of interest. First is the current year interest. Second is the proportionate of the pre-construction interest. And in case if you are co-owning your property with any other co-owner, maybe your spouse, your parent, your child, in that case, this interest deduction will be based on the proportion of the ownership that you have. But again, this can be claimed only if you are opting for old tax regime. Then talking about section 80EE. So here there are few conditions. So if you satisfy all these conditions, only in that case you are eligible for this deduction. So those conditions are, first thing is, if you have taken housing loan between a time period of 1st April 2019 to 31st March 22 from a financial institution. Second being, you must be a first time home buyer. And third being, the stamp duty value of this house property should be either 45 lakhs or less than that. So if you are satisfying all these conditions, in that case, you can claim this deduction under section 80EE. And here the maximum deduction will be up to 1.5 lakh rupees. Again, this deduction can be claimed only if you are opting for old tax regime. Now, one more important point here is, if you are satisfying all the conditions under section 24B as well as 80EE, in that case, the maximum deduction you can claim in a particular year is up to 3.5 lakh rupees. That is 2 lakh under 24B and 1.5 lakh rupees under 80EE. Now talking about the investment options that you have under ATC. Now when we talk about ATC, there is a long list of investments which you can make. But in this particular session, we will talk about the common deductions or the most important deductions or the investments that you can make. But apart from that, there are other deductions also which you can do and take the benefit of. Now talking about the ATC investments, but before we deep dive into those, there are two important points which you should take a note of. First thing is, all these investments that we'll be discussing under ATC will be allowed only under the old tax regime. And second thing here is, all these investments put together, the maximum deduction which you can claim is up to 1.5 lakh rupees. That means the umbrella limit here is 1.5 lakh rupees. Now, what are the investment options that is available for all of us? First thing is the PF. When we talk about PF, there are three categories of PF that are there. First is EPF, which is Employee Provident Fund. So this is nothing but the PF amount that is deducted every month from your salary by your employer. Second is VPF, Voluntary Provident Fund. So if you want to go ahead and contribute voluntarily to the PF, which is above and beyond your EPF amount, you can do that and you can claim deduction under ATC. Third option is PPF, which is for the general public, as the name suggests, Public Provident Fund. So here you can make investments in the name of your own self, your spouse, or your child as well. So here the PPF comes with minimum lock-in period of 15 consecutive years. Second thing is the life insurance policies. So if you have taken a life insurance policy covering yourself, your spouse, or your child, you can claim this deduction. Third being the ELSS, which is Equity Linked Savings Scheme, which is commonly known as the Tax Saver Mutual Funds. So here, if you are investing in the Tax Saver Mutual Funds that is coming with a minimum lock-in period of 3 consecutive years, you can claim this deduction. But one important point here is, if you are making any capital gain, that is the maturity value is more than the investment value, in that case capital gain will be arising and this capital gain needs to be offered to tax under the capital gain head. So there are no capital gain exemptions which you can claim. Then talking about the housing loan principal here. So earlier we talked about the interest repayment. So when we talk about the principal repayment here, principal repayment of the housing loan that you have taken, you can claim that deduction under ATC. Apart from that, you can also claim the stamp duty value or the registration fees that you have paid for the purchase of your house property. So that can also be clubbed here and you can claim the deduction. Next, you can also do a tax saver FDs with banks or financial institutions that is coming with the minimum lock-in period of 5 consecutive years. And whatever interest that you receive on this tax saver FDs, so that needs to be taxed under income from other sources. So for interest, you will not get any tax exemption, but only for the investment that you are doing. So only for that amount, you can claim this deduction under ATC. Next being tuition fees. So whatever tuition fees, whatever amount that you are paying as tuition fees for your child for admission in any school, college or university, you can claim this deduction. But only the amount that you paid as tuition fees will be allowed as a deduction. The development fee, donations, or any other fee for that matter will not be allowed. So these are about the investments under ATC. So apart from that, you also have Sukanya Samriddhi Scheme, National Savings Certificate, ULIPs, NABARD bonds, etc., which you can invest and claim deduction under ATC. But again, all this will be allowed only under the old regime, and second being the umbrella limit is 1.5 lakh rupees. Now talking about the pension products. So as I earlier also said that there are two dedicated sections for the pension. First is 80CCC. Now this is for the pension plan or the annuity plan of the LIC for which you can claim the deduction under the old tax regime. But again, this is not used by most of the individuals. And second being 80CCD, which is NPS or National Pension Scheme. Now when we talk about National Pension Scheme or 80CCD, so there are three sections under which you can claim the deduction. First is 80CCD1, which is for employees' contribution to NPS. So here you can opt for NPS and you can make sure that a amount is deducted from your salary every month. So here the maximum deduction that you can claim is up to 10% of your basic salary. But this will be allowed only under the old tax regime. Second being 80CCD, which is employer contribution to NPS. For this, you can claim deduction irrespective of the regime that you are selecting. But there are two different percentages. So if you're opting for old tax regime, you can claim deduction up to 10% of your basic salary. But if you're opting for new tax regime, you can claim deduction up to 14% of your basic salary. And third being 80CCD1B, which is additional contribution to NPS. So you can do some voluntary contribution also and you can claim the deduction. And here the maximum amount is up to 50,000 rupees. And you can claim this deduction under 80CCD1B only under the old tax regime and not under the new tax regime. Now, one important point to be noted here is there are few overall limits that you need to consider. First is ATC, that is all investment options under ATC, plus ATCCC, which is pension plan, plus ATCCD1, which is employee contribution to NPS. All these three put together, the maximum deduction that you can claim is up to 1.5 lakh rupees under the old regime. In addition to this, you can claim 80CCD2, employer contribution to NPS, up to 10 or 14% of your basic salary. In addition to both of this, you can also claim 80CCD1B additional contribution to NPS up to 50,000 rupees, but only under the old tax regime. So these are the overall limits that you need to consider. That is ATC plus pension products. Now talking about what are the other deductions which are above and beyond ATC. So here, when we talk about the other deductions beyond ATC, again, there is a long list of deductions which you can claim, but few deductions are very specific, so that we will not be talking here. But what are the deductions that is available or that can be utilized by larger audience? So that is something we will be discussing here. But having said that, if you have any particular doubt in any sections that we might be discussing or we might not be discussing, but if you have any specific doubt in any other section also, you can post it in the chat box. Now, what are the deductions which are above and beyond ATC? So here the first thing is 80D, which is for the medical insurance premium or for the medical expenditure. So here under 80D, so there are two components to it. First is the medical insurance premium and second is the medical expenditure. Now talking about the medical insurance premium. So if you have taken a medical insurance policy for yourself, your spouse, your dependent child or parent, you can claim this deduction. So here the deduction limit will be based on the age of the insured. So if the insured person is a non-senior citizen, in that case, this deduction can go up to 25,000 rupees. But if that person is a senior citizen, that is if his age is above 60 years, in that case, 50,000 will be the maximum limit. So here, if you have incurred any amount for the purpose of the preventive health checkup, you can claim the deduction also up to 5,000 rupees. Now here for the medical insurance premium, your parents are also covered, as I said. So this limit, that is 25 and 50,000, is separately for your family as well as for your parents. Next, we also have 80D, which is the medical expenditure. So here, if you have incurred any medical expenditure, you can claim the deduction. But there are two conditions that you need to satisfy. First thing is, this person for whom you are incurring this expenditure, he must be a senior citizen. And second is, he must not be covered under any medical insurance policy. So if both of these conditions are satisfied, you can claim the deduction. And here the maximum deduction can go up to 50,000 rupees. But again, both of this will be allowed only if you are opting for old tax regime. Then talking about ATE, which is interest on educational loan. So here, if you have taken the educational loan and whatever interest that you are repaying, for that you can claim the deduction. But this is allowed only under the old tax regime and not under the new tax regime. Now, in order to claim this deduction under ATE, there are few conditions that you need to satisfy. First thing is, you must have taken this educational loan from a financial institution or any approved charitable institution. And second condition is, this must be for a higher education. Now, higher education means whatever you are pursuing after you clear your senior secondary examination, which is nothing but +2. So after that, whatever you are pursuing, for that, if you are taking a loan, you can claim the deduction. And this higher education can be either for your own self, your spouse, your child, or for a child for whom you are a legal guardian. Now, talking about ATE, we don't have any specific limit or any maximum limit to which this deduction can be claimed. So that means whatever interest that you are repaying every year, you can claim this as a deduction. But there is a limit on the tenure, on the maximum tenure up to which you can claim the deduction, and that is up to 8 years. But again, ATE can be claimed only under the old tax regime. Now, talking about ATG, which is donations. So here for the donations, there are different percentage or there are different limits that is applicable. So that basically depends on the nature of the donee. So depending upon the nature of the donee, we have two deductions possible. Either it can be up to 50% of your donations, or that can be up to 100% of the donations that you have made. For example, if it's a charitable institution, in that case, up to 50% is allowed. But if it is some institution coming under the government control, like PM Relief Fund, CM Relief Fund, in that case, 100% of the donation can be taken as a deduction. But kindly ensure that whatever you're donating, you're taking a ATG certificate or the donation receipt from the donee, because that will act as a valid proof. And also, if you're donating more than 2000 rupees, in that case, you need to ensure that it is in a mode other than cash, because cash donation up to 2000 rupees is allowed. If it is above 2000 rupees, it will not be allowed as a deduction. Again, this is allowed only under the old tax regime. So now this was about the deductions. But again, as I said, there are other deductions possible also which you can take the benefit of. So if you have any specific doubt in any other sections that we have not discussed, you can ask me in the chat box. Now talking about what are the important points for assessment year 25-26 filing. Now when I say assessment year 25-26, I necessarily mean financial year 24-25. That is the financial year that was over and for which you need to file your income tax return. So the income tax return filing process has already been started, and here the due date to file your income tax return, that is the last date to file your income tax return, is 15th September 2025. But by any chance, if you miss to file your income tax return by this date, in that case, you will also have a time limit till 31st December 2025 for the belated return. But again, it is not advisable because there are certain advantages or there are certain interest penalties that will be applicable for you. So that's why it is not recommended to delay till 31st December. But if you have any reasons, in that case, you will have time till 31st December. But here the original due date to file your income tax return is 15th September 2025. So kindly ensure that you are filing your income tax return well within the due date so that you don't end up paying any late fees, interest penalty, etc. Now, what are the important points that you should consider? First thing is the standard deduction under the new tax regime. So earlier it used to be 50,000 rupees under both the regimes, but from assessment year 25-26 onwards, this has been increased to 75,000. But again, this change is there only under the new tax regime. So under the old tax regime, still we have standard deduction as 50,000 rupees. Second change being deduction from the employer contribution to NPS. So this is something we have already discussed. So here, if you're opting for old regime, in that case, it will be 10% of your basic salary. But if you're opting for new tax regime, in that case, it will be up to 14% of your basic salary. So this was about the changes that are there from a perspective of a salaried individual. Now, again, I understand that most of you might have some capital gains, maybe from the sale of shares, mutual funds, property, etc. So there are few notable changes that needs to be considered here from assessment year 25-26, especially with regards to the capital gain taxation. So here the first point is with regards to the holding period. Now please understand that when we talk about capital gains, there are two types of capital gains. Either it can be long term or either it can be short term. Now based on the holding period, right? So how do we classify this? Based on the holding period. That is for how many years or how many months you were holding this particular asset. Earlier, we used to have three holding periods, 12, 24, or 36 months. So based on this holding periods, we used to classify. Now this 36 months holding period has been eliminated. So now we only have 12 or 24 months to classify a particular asset as a long term or short term. Then talking about the indexation benefit. So earlier we used to get an indexation benefit on long-term capital assets to compensate for the inflation that is happening every year from the date of the purchase. But this indexation benefit has been eliminated. But there is one exception here. So if you have, so if you're selling any land and building which you purchased before 23rd July 2024, in that case you can go ahead with two options, either to go with indexation or to go without indexation. So if you are going with indexation, in that case, 20% will be the tax rate. And if you are going without indexation, 12.5% will be the tax rate. So whichever is more beneficial for you, you can go ahead with the same. Third important point is the tax rate. So now all your long-term capital gains will be taxed at 12.5%. And with regards to the short-term capital gains, there are two different rates. So if it is a specified financial assets like listed equity shares, equity oriented mutual funds, the rate will be 20%. And if it's any other asset, in that case, it will be the normal slab rates. One important point with regards to LTCG here is if you have sold any listed equity shares, equity oriented mutual funds, so here you can claim exemption up to 1.25 lakh rupees. Earlier it used to be 1 lakh rupees, but now that has been increased to 1.25 lakh rupees. So this is about the capital gain taxation, the changes that were there. Now talking about the last part here, which is the tax slabs. So what are the tax slab and the rates under both old and the new tax regime? Now here again, please note that this is restricted only for assessment year 25-26. We are not talking anything about assessment year 26-27. Now, when we talk about assessment year 25-26, let us first understand for old tax regime, then we will talk about the new tax regime. Now, when we talk about the old tax regime here, so here if your income is up to 2.5 lakh rupees, you need not pay any taxes, rate will be nil. So 2.5 lakh rupees is the basic exemption limit. For your income between 2.5 to 5 lakh rupees, 5% will be the rate. For your income between 5 to 10 lakh rupees, 20%. And if it is exceeding 10 lakh rupees, it will be 30%. So this will be followed by cess at the rate of 4%. So surcharge will come into picture if your total income is exceeding 50 lakh rupees. Rate surcharge depending upon your total income. Old regime, this basic exemption limit, which I said as 2.5 lakh rupees, will vary according to the age of the taxpayer. So if that person is a senior citizen, that is between 60 to 80 years, 3 lakh rupees is the basic exemption limit. And if he is a super senior citizen, that is more than 80 years, in that case, 5 lakh rupees is the basic exemption limit. Now talking about the new tax regime here. So under the new tax regime, irrespective of your age, 3 lakh rupees is the basic exemption limit. For your income between 3 to 7 lakh rupees, 5% will be the rate. 7 to 10 lakh, 10%. 10 to 12 lakh, 15%. 12 to 15 lakh, 20%. And if your income is exceeding 15 lakh rupees, it will be 30%. So this will be followed by health and education cess at the rate of 4%. And surcharge will be there if your total income is exceeding 50 lakh rupees. So again, we have different rates of surcharge depending upon your total income. So this is about the slab as well as the rates under the new tax regime. So here if you can see, the new tax regime is much more beneficial with regards to the increase in the basic exemption limit, with regards to the 30% tax bracket, And with regards to the other slab and the rates also, so new tax regime is becoming much more beneficial. But again, as I said, this slab and the rates are applicable only for assessment year 25-26. For assessment year 26-27, the slab and the rates under new tax regime has undergone lots of changes. But again, this session is focused only on assessment year 25-26, so that it should be helpful for you to file your income tax return in the upcoming days. So that is why this session is only based on that. But there might be few doubts with regarding to the assessment year 26-27, wherein the 12 lakh rupees limit, rebate, etc. But that is something we will try to discuss in the upcoming sessions that we might be planning for the next year, that is after the due date is over. So we might plan a different session to cover all those things. But again, the session was majorly focused on assessment year 25-26 filing. So now there might be one more question which might be coming up about which regime should I select. So if my income is this, so here there is no straight answer or there is no clear cut answer on which we can tell which regime is better for a particular person. So this is highly individual task that we need to do for each and every person. So depending upon their total income, depending upon the investments that they have, so depending upon the deductions which we can claim for them, so all these things needs to be considered, and then only we might be able to guide you better. Now, when we talk about the old tax regime, although you can claim lots of deductions and exemptions, but the slab and rates are not much beneficial for you. But when we talk about the new tax regime, although you will get very limited deductions or exemptions, but still the slab and rates are much more beneficial for you. So, as I said, there is no clear cut answer or there is no conclusive answer for this. So, this will be based on your individual income level, on your individual investments deductions that we can claim. So, this was the explanation from my end. So, I could see there are few questions in the Q&A already, and there are few hand raise also we can see. So, I'm not sure whether we can allow them to talk or not. So,
Aishwarya, I think first let's address the questions that we have in the Q&A section.
yes, sure.
Yeah.
Yeah, maybe, and I would prefer if people can put questions in the Q&A only, so that it will be easier for me also to answer. So if there is any question which people only want to unmute and ask, so then we might see. But it is preferably each and every individual, whatever questions you have, please put it in the Q&A.
Right.
Okay.
So, Aishwarya, are you able to view
Yeah.
the Q&A?
Sorry.
Are you able to view the Q&A
Yes.
section? Yeah.
Yes. I can do that. Yes.
So, yeah, let's take up the question now.
Right.
There.
Okay, so there is one question on the severance pay by my previous company can be claimed as exemption from tax under 18(9). Under some places it is written that it is taxable, but as per the website link as mentioned below, I can claim exemption on severance also. Kindly help me understand. Okay, so here again it depends. So now again, see, if there is no clear cut answer, so here what you can do is we need to see again, like in your form 16 that is given by your employer, it is considered as what. So accordingly, we have to see, we have to check this. Again, please don't go by any the random blogs or the ClearTax blogs. So here we need to check the section, we need to check the Income Tax Act, as well as we need to check how the employer is giving in the form 16, because that is also important, and accordingly we have to check. Because if we can claim the exemption under 18(9), so in that case, in few cases, the employer would also calculated this and they would have given this in the form 16 as an annexure. So we need to check this thoroughly, and then we need to take an exemption. Again, which regime is best, old or new? So this I already answered. So that basically depends on your individual income as well as the investment level. For new tax regime, you cannot claim PPF or VPF, so that is not allowed under the new tax regime. Again, for any person, who is asking, if my income is this, then which regime should I select? So as I said, there is no clear cut answer for this. So only with the salary, I will not be able to guide you about how you can do that. So we need to check truly about what are the investments that you have already done, and accordingly we need to check which ITR to be filed if you are a salaried, plus you also have ledger maintenance for trading in equity, option and futures. In this case, if you're trading in options, futures, etc., in that case ITR 3 will be applicable for you, because that will be considered as a business income. After deduction of PF and NPS, whatever salary will be under income tax. Under income tax, is it right? Kuldeep, I did not understand your question. With regards to the donations, yes, charities are also considered, but kindly ensure that to whichever charitable institution that you're donating to, so that should be registered under the Income Tax Act under Section 10, and they should give you the donation receipt, under which it is clearly mentioned that this is eligible for 80G deduction. List of deductions under new tax regime. So standard deduction you can claim, and employer contribution to NPS is something which you can claim. Prashant, yes. So this we have already discussed about NPS in the new regime. Yes, you can claim the deduction. Okay, with regards to the flexible components, this you need to check with your employer, right? So, this travel allowance, meal allowance, uniform, etc. So, this will be subject to the organization policy. So, you need to check with the IMT care. So, each and every organization might not provide all this as a flexi benefit plan. So, first of all, it should be there in your FBP, and you need to opt for it. So, again, this will be subject to organization policy, and after that only you can claim the deduction while filing your income tax return. With regards to the 12 lakh rupees limit, so as I said, so this is applicable from assessment year 26-27, not from assessment year 25-26. Company is paying medical premium, can we claim under 80D? So if it's a group medical insurance, you will not be able to claim it. But if it is something like top up and all, you can claim it, provided you have a medical insurance policy number of the same. Okay, with regards to the financial wellness, yes, the session was about that only. So all your financial wellness, the tax savings, everything has been covered throughout the session. Yes, so recording is done by the IMT care itself. So they will be sharing the recording with you. Income tax portal is not fetching details from Form 16, and it is demanding all the deductions. Is it mandatory to resubmit all proof again as we have provided? Yes, so here you need not submit all the proof as such. So if you whatever deductions that you are claiming, so for that you need to provide the document number, the policy number, etc. So that needs to be provided. But apart from that, you need not submit any proof or any document as such. Okay, tax benefit on commercial property, no, you will not get it. It should be a residential house property. For long-term benefit tax, if I sell my property and buy another, then do I get tax benefit? Yes, you will get it, but it should be like you should be selling a residential house property and buying a residential house property. Or if you are buying residential house property, in that case only you will get this deduction, both under new and old tax regime. So I have changed two companies. First company, old regime. Second company, this depends. Okay, this depends. So there is no rule that you have to opt for old regime. Nothing like that. You can opt for new regime also. But while filing the income tax return, you need to check. So at that time, whatever regime that you are selecting, for that you can claim the deduction. I have two home loans. And this one during 2019 and 22, which is claimable under 80 24B, but I'm getting error stating deduction under section 80 can be claimed only if the limit exhausted under 24B. So please note that the loan details of the respective property under 80 is being claimed should be same as in 24B. Okay. So here okay, so Abdul, you can claim it, so there is no issue in that. So first, whatever you are, let's say in 80 you took 1.5 lakh rupees as the deduction, and first you need to take as per 24B. Okay, so let's say both of this put together, it is coming as rupees, let's say 4 lakh rupees. So in that case, first put it under 24B of 2 lakh rupees. Remaining you will have 2 lakh rupees. So under 80 EEA, you can claim up to 1.5 lakh rupees. So 50,000 rupees will be lapsed. But again, first claim it under 24B, then you can claim it under 80 EEA. Can parents be claimed as dependents? That depends. So if they are not earning anything, so in that case, yes, that will be allowed. So that will be called, so your parents will be called as your dependents. So if they are not earning anything. Can any loss from options trading be beneficial for tax exemption? Yes. So this loss you can carry forward it. So next year, let's say if you are making a profit from this options or futures, in that case you can take a exemption or you can claim the benefit of the same. Okay, so this Ravi's question I've already answered. Can LTCG gain by selling RSU be exempted if the whole amount is used to repay the home loan? No. So here, if you are using to repay the home loan, it will not be allowed. But if you could have used it for the purpose of buying a residential house property, in that case, yes. But in order to repay the home loan, no, it will not be allowed. Ravi, yes, for financial year 25-26, the limit is 12 lakh rupees. I receive company RSU, which ITR form I need to fill. Okay, so if it is a company RSU, in that case, uh, if you have sold something or if you're just holding it, in that case, ITR 2 needs to be filled in because you need to give the disclosure of this as a foreign asset. Ravi, no, loan taken from family friend, you cannot take any deduction for this. If CTSA is 15 lakh, will income tax levied after standard deduction 75K PF amount and NPS? Yes. Is 1.5 lakh rupees maximum reduction? Yes, or under 80C. So under 80C, 1.5 lakh rupees is the maximum limit. Again, Shriman, I need to, consider all these things. So, only with regards to the CTC, again, I cannot tell all the investments that you can make because I don't know how much tax that is being deducted. And here, whatever the investments that I told you for this whole half an hour, so you can take that as a guidance. So you can make the investments and then you can take the refund. Okay, with regards to the advance tax, see here the thing is if you have some additional income, like just a minute. Yes. So about advance tax, so here if you have any additional income apart from your salary, let's say it's dividend, capital gain, or interest, in that case, the TDS deducted will be only at the very minimal rate. So that's why there will be additional tax liability that will be arising on you. So for this, in order to compensate this, you can pay the advance taxes. So there are 4 different due dates to pay the advance taxes. So you need to pay that. Otherwise, there will be interest liability under section 234B and C. So that's why if you have any additional income which is not covered by the TDS completely, you need to pay the taxes. PDF will be shared with you. Cash gift exempted from tax. No, it is, if it is up to 5,000 rupees from your employer, it will be exempted. Otherwise, no. Otherwise, it will be taxable. Is it possible to transfer PF amount of last two companies to a single PF account with new company? So this I'm not sure. So you need to check with your employer. So I don't. Okay, so possible. So it would be already transferred, right? So as soon as you switch companies, so whatever was there in the uh, earlier PF amount, so that will be transferred. But you need to check with your employer. I'm not very sure on this. How to redeem Sudaxo amount in cash? This you again need to check with your employer. Yes, Prashant, you can do that. The question is wrong, is very long, so I'm not reading it. But yes, you can do that. No, GST paid will not be allowed as a deduction. Yes, physically handicapped parent, yes. So we have section 80DD. So under that, you can claim the deduction. So with regards to the educational loan, only the interest that you are repaying, for that you can claim the deduction. Yes, you need to mention it as a foreign asset. So, foreign brokerage account. So, you need to mention it as a foreign asset and file ITR too. New regime, I have already told you, you can claim standard deduction and you can claim the NPS employer contribution. I'm transferring amount to wife or parents. Can this be considered under tax exemption if it's shown as gift to family? Yes, you can do that, but again, there are few conditions that we need to check. And but usually, yes, if it is the immediate family member, wife or parent, yes, you can claim it. Okay, for your wife, you need not file an income tax return. So if there is no sale and if she doesn't have any income, then you need not file her income tax return. Right. So all the questions are being answered. So let me know if there are any other questions. LTCG for mutual fund and equity is applicable after holding it for more than 1 year or more. Yes, you are right. If it's a listed equity shares and equity oriented mutual funds, 1 year will be considered, 12 months will be considered. Right. So I have
Yes.
answered all the questions. So there are no questions.
Yes, I think all our participants' doubts are cleared. Aishwarya, it was a great, insightful session for all of us, and a lot of our doubts are cleared, and we have got clarity on how to go about. So, thank you so much, everyone, and Aishwarya for this session, and our participants as well.
Right. Thank you. Thank you so much.
Thank you.